Hey, it's Mack with PriceActionTradingSystem.com, and it is Monday. It's September 15th. This will be our chart lesson for today. And I believe that we're in a two-tiered upward sloping channel. It's not a very strong, look how flat the EMA is. Look how prices are swinging back and forth to each side. So regardless of whether or not there's two tiers here on this channel, you can see that the midline and the lower line, actually I need to probably go ahead and make these darker now. I originally had them um, highlighted out because I weren't sure if they were in play, but in the end, I do believe they are. However, having said that, you can see that there is a high and low of a range here almost as well. And look at this right here. This was the open today, and it is dead center on each side of this lows and this highs where most of your turns have come from off the lows, and most of them have come from off the highs until you got this breakout right here. And notice we did have a break down here, and it's about a measured move off the upper side. So, on a range day, a lot of times this will happen. You'll make an overnight low, an overnight high, and then most of your action goes on in between. So, and this was the open for today, this fatter, thicker yellow line. There's a thicker yellow line somewhere. It should be the open from previous trading day. You see it's up here. Here's the high from the previous trading day. This red line, which is where most of your lows of the day have been, were the previous day's low of the day. And so prices have been stuck between the previous day's closing, low of the day, and the current day's open. And look how that, I mean, it's amazing how that does. And I probably haven't talked about that enough, but I don't want to get people confused and looking for too much at the same time. You can see all of this without actually knowing that, but it helps if you know where these areas are. And another trader's reminded me several times that I don't talk about it probably enough, so I'm trying to show it more often. But you can see there, I'm going to start leaving these lines on my chart, and you can see that. So you could have just as easily played this as a range between those two lines with a midline, or you could have played it the way I did. And of course, I used them both to help me decide when I might go long or when I might go short. Obviously, when you get down here around this line right here, you don't want to be thinking about going short. When you get right around this line in here, you don't want to be thinking about getting long. Um, except for this one time right in here. Of course, there's enough room to get out between that line right there. But we weren't, at that point, I really thought we would go higher here and go to the upper side. The trade worked, and there is a trap there as well. But since then, I would have been very leery about going long into that line. In fact, I might even think about going short off of it after we tested it a couple more times here and then again. And now we went above it, came back, tested it, and then tried to go lower. I do believe we may make a retest of this. Notice this little channel working up if I've got it drawn it. If I've drawn it properly, we got the break and a couple of attempts to go lower, and now we're trying to go higher. So I'm guessing we'll try to make a new high here. We may not, though. This line may hold, so we may get a long trap and turn down instead. Because look at that new high, first entry long, pull back, second entry long. I would have been leery about going long right here this late in the day. I don't think there's a trade here actually because look at all the overlap so long in the day. If this would have this actually broke lower first. If it would have went out the upside, I would have liked it then. Or even if it had broke on this bar, I might have liked it. But you see, looks like we're trying to trap people to the long side and go lower, and it could just break lower right there and then turn up. So I just don't recommend entering anything this late in the day. But at this moment, it looks like we've got a long trap, and we may come back down and test the lows again. So, or at least this line or this midline here. So we'll see what happens. But no, so far they haven't been able to break it lower. Let's talk about the trade, but hopefully that makes sense. It looks like there is a slightly upward bias channel here, but again, there's a clear range type action going on here with a clear midline. And I didn't draw the midline. The yellow line serves a purpose, and that was the open of today. And notice how we've been swinging back and forth on both sides, just no direction to this thing at all until we got a little bounce here. But I believe that's because we do have a slightly upward bias to this thing. So anyway, that's what I saw today. Let's talk about the trades. Let me make this a little bit bigger just to make it easier to see. Okay, when I came in, we were working up in this channel. We had a close outside it right here, moved to a new high, and then a failed second entry short that broke lower right here first and went out the upper side. Just go long right there. And this is why we don't try to get more out, squeeze more out of a trade. You only had enough room to get out before you got to those highs, and look what happened when you got there. It sold off strongly then. So if you held on for anything more, you had a loser where if you followed the rules, you had an easy winner. So that's why I'm always telling you, don't break the rules. You can't get in late, because if you get in late, you didn't have enough room, and you can't hang on for an extra tick or two in most cases, because if you did, you wouldn't have had enough room. And so we've got this thing down to a science. Follow the rules. This one I circled in green, but it is right on the border. We had a break. You've got a couple legs up. This was strong resistance. This was the close from a previous day, the high of this day. A lot of reasons for some resistance right in here, and it turns down. We had the break. We had a break outside the trend line, two legs up to a new high, a bearish reversal bar after breaking above those highs right there. You figure it's coming back at least to the EMA. And so I like that trade, and that's why you don't want to go long way up there either, so far away from the EMA. You know, most of your best trades are going to set up on pullbacks that are close to the EMA or around the EMA or whatever. So turns out you could have gotten a lot more. Look how that went right through the EMA, didn't bounce until it got to the open from this morning, to the, or I guess you could call it yesterday's open. Since it was Sunday, it was the 5:30 or whatever time the market opens. What time does it open? I can't remember. 5:30, something like that. That was 17:01's 5 o'clock. So I guess maybe it opens at 4:30, 5:30 Eastern. I can't remember. I don't trade on Sunday, so I don't know and don't really care. All we care about is that level, and you can see how important it was all day long today. Uh, but anyway, this one was just real borderline being red. I wanted to mark it red, but it's a first entry, and it could have easily ticked down here and bounced, but that far away from the EMA, that's the reason I like it. And then you get a first entry long. Notice the new high, pull back first entry, pull back second entry. The second entry fails. I don't think you want to go short right there. Um, it's not a very good bar. Maybe if it would have broke below this bar or the next bar, you might have gone short right there. But once that one stacked up, now you've got 3 or 4 stacked up there. A couple of them are dojis. Just wait and see what happens, because there's a chance if it breaks right there, it's going to bounce. So what happens? It breaks out the low side, traps everybody, runs all the, traps a bunch of shorts in, stops out all the people that got long. Then it runs up the upside and breaks out and fails. And what does it do when it does that? Once it breaks higher, it stops out all the shorts that got short right there, and they all reverse and go long, and then it reverses and goes exactly where you thought it was going to go the first time. And that's the way, little range. That's just a trading range. I call it congestion because it's only a few bars, but it works the same way as any trading range. And now guess what? You got a double top with a little failed tick higher, kind of an inside bar. You might have tried to use a limit order here, but you may have got left behind if you did. And I think it's also a breakout pullback short. You're looking for a test of a new low and all those things. And it ends up making another measured leg down for the most part. And then it was real tempting to go long right here, but you've got one leg down, and there's a chance it could tick up and do just what it did. We haven't really tested the main lows yet. You really probably didn't have these lines here yet. I didn't get these lines until I got this bounce right here. And so with all that overlap and all that in there, it's just really risky. And also, that was yet the close from the previous, I mean, the low from the previous day. So that's that dangerous spot to be going short. But you don't, but there's no reason to go long in here yet. Um, this was really tempting here, but I think you're better off to wait on a second entry. And by the time it triggered, you've just got some more, another doji in there. So everything's still above the EMA and bouncing off of. So just sit tight, and then guess what? You get that bounce right there. It breaks lower. It bounces. That one's what you call a reversal bar. If you use the limit order here, you probably got left behind because this one broke up. You might have got filled right there at the high, but I don't think you would have got filled to tick back in. And this one just took off real quick, real easy scalp. And then guess what? You get a new low, first entry short, pull back, second entry short. It breaks out the low side first, goes out the high, just go long. It's almost a repeat pattern, similar to the one we had over here. Just go long right there. Another easy scalp right into those highs. Be leery of those highs right there because that's kind of been an important spot. And again, it turns it down. There's a second entry short right there, but I don't think you want to go short yet because that's the first. According to the way I've got this line, it could be that this is a spiking channel, and maybe I'm reading it wrong, and you do have a break in a new high. So that's always a possibility, but I was reading it as being down here, and we really didn't get a close outside, so we didn't really get a new high yet. You notice we came back and tried it again, still couldn't get it. So but that's because a bigger pattern was in place. So I'm not sure what was right here. It didn't matter. You didn't have a short set up. You definitely don't want to go long above that doji. Wait on a second entry. You got a second entry right there, but again, now you've got this little line working down, and you don't have a break and a retest yet on it. You finally get the break, and you get a little long trap, and then you come down, you get the retest, and then it reverses. And notice on this one going down, you get the break and the retest. So you got a break and retest on this, a break and retest on this, and then of course you've got another one working down right here. I didn't even draw the line on that one, but it's coming right down through there like so. You can see how that's holding prices. You get a break and a retest, two legs, and then it reverses, just like what you expect. And so draw those short-term lines. They always help. Sometimes they're so short you don't get much out of it. Like even this one, you had a line, you had the break, it tried to retest, and then it went lower. And now you got this one working up, and you get a break right here. Now, but you got to pay attention to your trend line working down. You get the break and the new low, and then you get the new high off of this one. So now you have this one working down, you get the break, the new low, and it's still trying to go higher. We're just really kind of stuck in a congestion area there. So it'll be interesting to see what happens. So, but yeah, going back to the trades here, you got that little failed break lower. Notice all those lows across there. Then you get that little failed break lower. Wait on the second entry, it pulls back. I would have liked this one better if it would have went right on out the top. I would have used a stop. Otherwise, I think you need to try to use a limit order. If you use a stop, it was okay because that's a big bar. It's not a great setup. There is a little trap there. You actually got a double trap there, but you could have gotten filled on a limit order a tick or so back in this one, and then it turns up. Then guess what? Now you got the new low, first entry short, pull back, second entry short. It fails. That's a trap. If you didn't enter here, definitely enter here. And if you did enter here, you might add on right here. Nice, easy scalp. Runners, you know where to exit when you get ready for that line or close to this line. So, and then you're working down. You get the break. Notice that new low, pull back, first entry, pull back. That's a second entry short. It's not a great setup, but you're looking for prices to come back down and test, make a new low, test this. It's not a great setup, so I did circle it in green. But if you're paying attention to what's going on, and notice you didn't quite make that high right there either, and there's a little bit of a stem right there, and that's because the bigger pattern was in play. And so you're looking for prices to come back down here now. Notice how they're just going back and forth. And you would think at some point we'd go on through and test the upper line, but it hadn't happened yet. So, and I believe there's more of an upward bias than a downward bias. So, but it's really so rangy looking, and prices on both sides of the EMA. You just got to be careful. So, but then you get the bounce right here off this lower trend line again. Notice how it's a higher low than that one and that one. It's obvious we're moving higher. I don't like the first entry, but it pulls back, makes a little break lower, and then turns up. Just go long right there. Easy trade. Of course, you don't know it's going to take off like that, but you're expecting prices to come back up here. Definitely to here and probably to here. And notice this one goes much further. Goes all the way and makes a new high for the day. So, thinking about it like that, that's a new high of the day. We may not go any higher than that after all. So, um, but we'll see. We'll see if we end up with a trap. But it's it's 10 to 3. The market closes in 25 minutes or so. Generally, everybody exits by 3. The ones that are still trading, but that's another reason I just don't like trading this late in the afternoon. All your better moves are early on generally. Doesn't mean you do get a lot of those 1 o'clock moves like that one right there. That looks like some commercial type buying. Somebody can move the market with that kind of movement. And you do get some of that right around the 1 o'clock. I don't know what it is. Maybe they square up their books. Maybe that's when they come back from lunch and they're looking, to make sure they get their trades in by the day or whatever. But that's a nice little, you can see how bullish that move was right there. So, but going back to what I was saying, I prefer to do all my trading before noon. Market's more predictable before noon. You don't get as many odd traps as you do. Like right here, it's hard to say if they're going to trap people long or if they've trapped people long and going to go short. The way it's looking, it looks like it's going to go short. But, it wouldn't surprise me to see them trap them to the short side now and it still go higher. So it's just a little bit more, I won't say difficult to read the price action, but they just tend to have more traps and failed entries and things like that than they do in the early morning. Generally in the early morning, it's fairly predictable and things don't catch you off guard quite too much, where you get more of that in the afternoon. So, and it may just be me. Maybe I feel more comfortable in the mornings or whatever because I've traded in the morning so long and I've tried to be done by noon every day. But that's a piece you'll hear me, it's a recurring theme you'll hear from me. Do what makes you feel comfortable, because if you're comfortable and you're more relaxed and you make fewer mistakes, when you're not so sure of yourself and you're uncomfortable or you're kind of down and out, it will affect your trading. So, do what you feel most comfortable doing. And that's why some of this we don't have specific rules around. The part that counts, where you enter and where you exit on the scalp, that is, you can't monkey with that. You can't change that. You got to go with that because we've perfected it. So don't fool with that part. But the part you can work with to fit your personality is how many trades you take a day, how big your leverage is, how many contracts you trade, um, what time of day you trade, what your targets are for your runners, whether you use runners or not. All that is we leave kind of open-ended, and that's simply because it goes to preference and comfort level, because so much of this is what we do is mental, and you always want to have that good mental attitude, and you don't want to feel um, you got to be very positive and you got to feel comfortable and you got to feel like you're reading things properly and so forth. So I hope that makes sense. But anyway, I'm going to wrap it up for today. Hope you had a good trading day today. We'll be back to do it again tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.